Li Ka-shing, the 96-year-old businessman and one of the world's most influential Chinese figures, is making a major wealth transfer. Just recently, the market saw another explosive piece of news. Li Ka-shing's Beijing real estate project, which he has held for 23 years, is being sold at a discount. It is understood that this time, Li Ka-shing is truly going all out. The real estate project he sold is Yuchui Garden, located on the East 4th Ring Road in Chaoyang District, Beijing. This special price property is being sold at a 26% discount, equivalent to 76,000 yuan per square meter, with the selling price even lower than nearby second-hand properties. Yuchui Garden is the first residential project by Chengkong Holdings and Hutchison Whampoa under Li Ka-shing to enter Beijing, making his name renowned worldwide. However, even with a 26% discount, Li Ka-shing has still made a considerable profit. In 2001, sensing future business opportunities, Li Ka-shing went to Beijing, the top real estate potential city in mainland China, and spent 700 million yuan to buy a residential project with a floor price of just over 1,000 yuan per square meter. However, he was not in a hurry to develop it. Instead, he held the land for 4 years, observing and waiting. It wasn't until 2005 that Li Ka-shing began the first phase of the project, entering a long marathon observation period, watching the Chinese real estate market surge. More than 20 years have passed, and the second phase of Yuchui Garden will not be launched until 2024. Li Ka-shing's patience has paid off. Waiting is not in vain, as even with a 7.6% discount, Li Ka-shing has earned a 50-fold return from the rising real estate market. But why would Li Ka-shing, who is not short of money, sell at a discount now? Previously, on October 30th, Li Ka-shing sold China Postal Savings Bank H shares once again. This marks the 4th time he has reduced his holdings in the bank since the middle of this month. These moves are quite unusual and have attracted everyone's attention. According to information disclosed by the Hong Kong Stock Exchange on October 30th, Li Ka-shing and his son Li Zeju reduced their holdings by 20.153 million shares of Postal Savings Bank H shares on the market, involving capital of about 93.3 million Hong Kong dollars. So far, the number of Postal Savings Bank H shares held by Li Ka-shing and his son has dropped to 1.186 billion shares, with their shareholding ratio falling to 5.97%. This is the 4th time Li Ka-shing and his son have reduced their holdings in Postal Savings Bank since October. According to the Hong Kong Stock Exchange, on October 14th, Li Ka-shing and Li Zeju reduced their holdings of Postal Savings Bank H shares by approximately 78.517 million shares at an average price of 4.6711 Hong Kong dollars per share. On October 17th, they reduced their holdings by about 22.801 million shares at an average price of $4.73 per share. On October 24th, they continued reducing their holdings by around 35,734,000 shares at an average price of $4.62 per share. Regarding the recent sale of some H shares of Postal Savings Bank, held by the Li Ka-shing Foundation, the Chengkong Group responded to a reporter from Securities China on the evening of October 30th, stating that the recent reduction of some shares of Postal Savings Bank is part of the foundation's routine financial operations and is unrelated to the operations and development of Postal Savings Bank. Analysis from Goldman Sachs. 5 Chinese industries are in serious crisis. Goldman Sachs Group of the United States analyzed the supply and demand trends of solar photovoltaic panels, lithium-ion batteries, air conditioners, electric vehicles, EVs, construction machinery, steel, and power semiconductors in China. Among these, except for steel and power semiconductors, the other 5 industries have fallen into global overcapacity, and excess production capacity will lead to many consequences. When supply significantly exceeds demand, technology dumping or downsizing will inevitably occur, potentially leading to instability and crisis. Japanese media reported that the most serious overcapacity is in solar photovoltaic panels. China's supply capacity has reached 1,036 gigawatts, which is 1.9 times the global demand of 533 gigawatts in 2023. It is expected that China's supply capacity will continue to exceed global demand beyond 2024. Solar photovoltaic panels are a typical equipment industry. The larger the production scale, the lower the unit cost. This was once a field where Japanese companies stood out, but because they could not keep up with the investment competition of Chinese companies, Japanese firms were forced to withdraw from the market. China's global market share has now reached 86%. China's lithium-ion batteries and electric vehicles, which lead the world in technological competition, are also in overcapacity. China's electric vehicle production capacity has reached 1.2 times the global demand for electric vehicles. The supply capacity of lithium batteries is 3.3 times domestic demand and 1.5 times global demand. To cope with the confrontation between China and the United States and increase production capacity in strategic areas, China began promoting expanded investment in high-end manufacturing industries such as electric vehicles and artificial intelligence, AI, in 2023. In this situation, companies have actively invested. Local governments also support these investments by selling land use rights at low prices and providing tax incentives and subsidies. According to estimates by the Center for Strategic and International Studies, CSIS, China issued subsidies totaling about $170 billion between 2009 and 2022. Buyer terminates transaction. Evergrande Auto loses last life-saving money. On the evening of October 25th, China Evergrande and Evergrande Auto both issued announcements, stating they had received notices from potential sellers and have decided to stop all discussions with potential buyers regarding possible share transfers. They have decided not to proceed with any potential share transfers. China Evergrande announced that the potential seller is continuing to seek possible buyers and explore feasible opportunities to sell the potential seller's shares in the new energy vehicle group. However, as of the date of this announcement, no agreement, arrangement, or understanding has been reached with any potential buyer, nor has any definite opportunity been found. To outsiders, the withdrawal of the potential buyer is undoubtedly adding insult to injury for Evergrande Auto, which is deeply in debt crisis. Daily economic news suggests this may indicate that Evergrande Auto has lost its last life-saving straw. Notably, this is not the first time a potential investor in Evergrande Auto has exited midway. In August last year, Evergrande Auto announced it had received the first strategic investment of $500 million from Newton Group, a listed company backed by the UAE Sovereign Fund. An additional 600 million renminbi in transitional funds was expected in succession from 5 working days after the announcement. The proposed transaction between the two parties was set to be completed in the fourth quarter of 2023, after which Newton Group's shareholding in Evergrande Auto would account for 27.5% of the total common shares issued after the expansion. To many, this investment from Newton Group was viewed as life-saving money for Evergrande Auto, which has suffered losses for years. However, on the evening of October 8, 2023, Evergrande Auto announced that due to changes at China Evergrande, strategic investor Newton Group had suspended its transitional funding support for the company and was renegotiating the necessary adjustments to the proposed transaction plan. On April 5th of this year, the strategic investment agreement between Evergrande Auto and Newton Group was officially terminated. According to a Yikai report, an announcement issued by Evergrande Auto in May indicated the company might soon secure a new white knight. At that time, Evergrande Auto said that its issued 29% shares would be immediately acquired by a third-party buyer, potential buyer. As per the announcement, the potential buyer and seller would sign a credit agreement. The potential buyer would provide Evergrande Auto with a credit line to fund the continued operation and development of Evergrande Auto Group's electric vehicle business. Previously, according to statistics from the Chinese Communist Party government, in September, the profits of China's industrial enterprises above designated size fell by 27% year-on-year. On October 27th, official economic data released by the Chinese Communist Party showed that in September, the profits of China's industrial enterprises above designated size fell by 27.1% year-on-year, marking the second consecutive month of decline. The National Bureau of Statistics of the Communist Party of China reported on its official website on the 27th that the profits of industrial enterprises above designated size fell by 27.1% year-on-year in September, an increase of 9.3 percentage points from August. Additionally, the asset-liability ratio of industrial enterprises above designated size rose by 0.1 percentage point to 57.7% at the end of September,